Hello, welcome to the European Open Briefing for Wednesday, July the 26th. I'm Rafi Bajajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we have quite a bit of going on this morning. The focus today, of course, is the Fed. We've got the FOMC meeting where they will announce their decision later today. The dollar saw quite a sharp reversal yesterday after we had some strong consumer confidence data. But the rise also came on the back of stronger equities in the United States. We still have some political uncertainty that's kind of limiting the dollar's gains. The main move this morning, apart from the dollar, is the Australian dollar, which fell after weaker than expected inflation data out of Australia. And commodities are doing a bit of a comeback. We're seeing oil near an 8-week highs. We had a big drop in US crude stocks from as per API data yesterday, and metals such as copper are also doing well due to strong demand outlook from China. But let's start with the dollar. We can see here in the chart the dollar yen briefly topped the 112 level late yesterday or early today, depending on your time zone. It's currently trading around just below the 111.90 level. Yesterday, the Conference Board's Consumer Confidence Index rose to 121.1 in July. That was well above expectations of 116.5. We also had very robust flash PMIs for manufacturing services on Monday. So all of this has helped turn the sentiment a little bit for the US dollar. But we can see that prior to the data, the dollar was actually under some heavy pressure against other currencies. We can see the dollar index had actually dropped to a fresh 13-month low before recovering upwards again, and that's because we saw yesterday a big jump in yields of other countries, other governments, particularly in Europe, which helped currencies such as the euro and the pound. So today the Fed is in focus. We're not going to have any press conference, and no change in rates is expected. But the Fed will probably give a clearer signal as to when it will announce or when it will give a date on starting its balance sheet reduction, which will most probably be September. In other developments, though, we're seeing equities help the dollar a little bit because yesterday we had strong earnings results which helped the S&P 500 and the Nasdaq Composite close at another record high. We're seeing the 10-year yield on US Treasury notes hit a 1.5-week high, although those yields have eased back a little bit this morning. There was also some optimism about Trump's tax plans after the US Senate yesterday narrowly passed the vote to start debating on repealing and reforming the healthcare in the United States. Although this is just the approval is just to start the debate. The first vote on the proposals by the Republicans actually they also voted on that yesterday, but they failed to pass that particular vote. So it means we will probably see quite a number of changes before a final proposal is approved in the Senate. And also worth mentioning that we have Donald Trump Jr., Donald Trump's son, and also Trump's former campaign manager appearing before a Senate committee as they will be quizzed with regards to allegations that Russia was attempting to interfere in the US election campaign in 2016. Moving now on to the Australian dollar, because we did have inflation data out of Australia. We saw quarterly CPI easing to 1.9% year on year from 2.1% in the first quarter. This was below expectations of 2.2%. The core measures were pretty much in line with expectations, but below the RBA's target for a sixth consecutive quarter. We also had the RBA Governor Philip Lowe speaking earlier today. He defended the current low rates in Australia, saying that it creates jobs, but but he did also say that he would prefer for the Australian dollar to be a bit lower. So all of this has reduced expectations of a near-term rate hike by the RBA. Also, Governor Lowe also said that he does not, just because other central banks are starting to raise rates, doesn't mean that the RBA has to move lock in step with them. So all of this has weighed on the Aussie this morning. It's currently it has slipped back below the 0.79 level against the US dollar, currently trading just below that at 0.7896. But despite all those dovish remarks and disappointing inflation, the strong rise in commodity prices and the risk sentiment we have in the past few days should provide good support for the Aussie in the coming days. And a quick look at the Kiwi as well. The Kiwi did touch a fresh 10-month high last week. It has steadily been drifting downwards this week. We had the Assistant Governor of the Reserve Bank of New Zealand, John McDermott, speaking earlier today, saying that a lower exchange rate would help rebalance growth. And so that was taken as a rather dovish, so that did put some pressure on the Kiwi. It did have a more positive start to the day, but fell back a little bit later, although based compared to yesterday's close, it's still slightly firmer against the US dollar. And moving on now to European currencies, we can see that big surge yesterday, both in the euro and the pound against the US dollar. The euro hit 1.1711. That's the highest in more than 2 years. The UK hit a one-week high of 1.3083. We did have a very strong German IFO data yesterday. We saw those readings reach record highs, in contrast to Monday's weak PMI readings. The pound, on the other hand, was mainly up on the back of the weaker dollar. We've got UK GDP data coming up very shortly, and that will be important because if we do see signs of further weakness in UK growth, it will probably mean we won't get a Bank of England rate hike this year. GDP growth is expected to come in at 0.3% in the second quarter. Then that's the first reading, so that will be closely watched. And looking now at commodities, because both oil and metal prices are sharply up. Yesterday we had the API inventory numbers showing US inventories, oil inventories were down 10.2 million barrels last week versus expectations of a drop of 2.7 million, and it follows Monday's announcement by OPEC that Nigeria is joining the output deal, and Saudi Arabia will be curbing exports in August. All of that has pushed oil prices to near 8-week highs. We're seeing Brent crude back about $50 a barrel, and US crude is around $48.50 a barrel. And a quick look at copper prices, because they've reached the highest since May 2015 this morning, and other metals are also up sharply. This comes after China. We had been seeing signs of rising demand from China, but we also saw an announcement by China that they are putting a ban on certain types of imports of scrap metals in order to cut pollution levels, and this would potentially lead to lower demand for low-grade copper scrap, as well as some other types of metals as well. We can see copper futures are currently trading at $2.87. And moving on to today's economic calendar, we did have New Zealand trade data, which didn't really see much of a reaction, and we can see there the Australian inflation data. Coming up shortly is the UK GDP numbers, and of course the FOMC announcement that's expected at 18 hours GMT. That's it from me. Thank you very much for watching, and have a great day.